Hey, hello. Thank you for having us.
Of
Hi,
course.
Anthony. How are
Thank
you?
you. Awesome.
Ash.
Awesome.
Oh,
Well, thank you guys so much. I'm going to turn it over to you guys.
awesome. Ash, welcome. A man that needs no introduction when it comes to having interviewed the brightest minds and topics of global macroeconomics, capital markets, and crypto. How are you doing today?
I'm doing great, Anthony. I didn't know that we were going to be following Raul and James.
I know it's a tough stunt to follow, but
I
I,
know.
I can guarantee that we can bring the heat and provide some incredible information here. Listen, I can't express how excited I am to be here on this side of the table, interviewing you today. I know that for you in your world, you're typically on the other side interviewing the brightest minds, so it's an honor, and I'm excited to be here. So
Well, thank you
listen,
for having me.
we love to have you, and it's going to be an exciting time here. Listen, I'd love to deep dive into the journey you've had over at Real Vision, chatting with the brightest minds on the global macro views. Your thought. I want to go into some of your thoughts in with regard to crypto and
Yeah.
your crypto journey over there at Real Vision. You guys have done some amazing stuff. I think at Real Vision, you guys do some incredible stuff to bring the brightest minds together. And I think for me, what hooked me was those daily briefings back about a year and a half ago. So I'm a big fan.
Yeah, we were like everyone else, trapped in our houses or trapped in our apartments during the COVID crisis. And obviously, news flow was moving very quickly at Real Vision. I think Raul just talked about this. We do these very long form, deep dive conversations. But we wanted to do something that was going to respond to all the events that were happening very quickly in the news cycle. So we spun up the Real Vision Daily Briefing. And also during a similar time frame, as Raul just pointed to, we spun up Real Vision Crypto, which is a free platform. Real Vision is a subscription service on the macro slash capital market side, but Real Vision Crypto is a free service that we wanted to put out because the space is so new, things are moving so quickly, and we wanted to bring people into the space to help them on their learning journey.
I have to say, I benefited from those daily briefings during the times that we were in our homes, and it was one of those times where that type of information was extraordinarily valuable. And
Anthony, I got to tell you, I benefited from it too. It kept me sane during the crisis when I was living in my tiny New York apartment. It gave us something to focus on, to think about as we tried to contextualize all the news flow that was happening. It was really a very, I think, difficult time for a lot of people, and it always brings me great pleasure to hear that people got some value from it. So thank you.
awesome stuff, Ash. Listen, Ash, why don't you give us a bit of your background, your journey at Real Vision, and what you guys are focused on in there today?
Well, my background is unusual. So journalism is my third career. I started out working in IT, doing product management, project management, building trading systems, and ultimately wound up working at banks in banking on the IT side, the fintech side, I guess it's now called. Then it was called the back office, but I loved it. I was fascinated by it. And about 10 years ago, I decided that I really wanted to cover this space to tell these stories. So I became a journalist at CNBC. I ran Nouriel Roubini's macroeconomic blog for a while, did some other stuff. And eventually I wound it up at CoinDesk, which, as most people know, is probably the largest provider of cryptocurrency news in the country right now. And I got hooked, man. I got totally hooked on crypto. Joined Real Vision in 2017 because I was very interested in what they were doing with these long form interviews on the macro side. And Raul and I both shared this incredible passion for cryptocurrency, digital assets, distributed ledger technology, all the things we cover at Real Vision Crypto. And we spun it up as a dedicated platform about 12 months ago, almost exactly a year ago today. So, this is what I cover day in and day out. And I feel as though I'm incredibly lucky to be doing it because it's just such an exciting time, Anthony.
Yeah, I mean, it's amazing to see the digital content that's been produced today and to see what you guys have done by really distilling all the greatest minds in the world, giving people the opportunity to really identify a thesis that fits their investing or trading style through all your interviews. For me, it's been so amazing to see it all come together. With all that said, Ash, you interview such amazing people on the Real Vision program, and I'd love to be able to hear a little bit about what your current macroeconomic views are based on those interviews, and kind of, where are we going today? What should we be thinking about as investors and traders?
Well, it's interesting. Depending upon one of the challenges that there always exists in this field is trying to figure out who your audience is. So it's always challenging when we're talking to macro investors. At Real Vision, we have people who have been investors in capital markets, macro investors for decades. We also have people who are incredibly new to the macro space who come to us from the technology side, from the digital asset / crypto side. So the question is always an interesting one when you think about that and when you look at it. And I think that, the first thing to say is it certainly appears, it's very early, that these two spaces are beginning to merge. So anyone who has looked at the total consolidated assets held on the Fed balance sheet knows that those have gone absolutely parabolic from around 700 or so billion now to about 8.5 trillion. The balance sheet has exploded massively over the last 14 or 15 years. This, of course, dates to the vintage of the global financial crisis when unconventional monetary policy became the standard over at the Fed. So we've seen this Fed balance sheet massively expand for people, especially older investors who remember the hyperinflation of the late 70s and early 80s. Some people have gotten very concerned by that until relatively recently, and I'm talking here the reopening trade around COVID, inflation simply didn't show up in the picture. There were a lot of folks talking about what happens when the bond vigilante shows up, and the bond vigilantes never showed up. And now, lo and behold, we are in this period where we're seeing spikes in inflationary pressure. Now, the official word from the Fed is that this is, as everyone knows, the word transitory. The implication here is that there are some imbalances in the labor market, some imbalances in supply and demand more generally in the economy, and that what we're seeing, according to the Fed's official position, is a transitory spike in prices that will abate and then begin to decline. That's been the official policy view. That's been what the guidance has suggested. That's what you see when you look at the dot plots. However, obviously, there are people who are concerned that this narrative may not, in fact, be what is happening. They believe or they fear or speculate that we may be in a period of rising prices. So is it that investors look for in rising prices? They look for safe haven trades. Historically, as most traditional investors know, that's been gold. At times during periods of inflation, it has also been stocks, things like leases in unconventional assets, places where you have elevator clauses, where you can collect in nominal dollars, but it moves away, obviously, from the bond market, away from fixed income securities. Right now, there is interest, obviously, in some quarters, intense interest in cryptocurrency, particularly in Bitcoin, as a kind of safe haven asset, a digital gold, a digital store of value, a store of value that exists off the grid, that the Federal Reserve cannot impact through monetary policy. So that's a bit of the broader macro context around why these assets, especially Bitcoin, are so interesting to investors as potential inflation hedges. I should also say, Anthony, as you alluded to, I'm a journalist, I'm an interviewer. I interview people on Real Vision. I am not a financial planner or financial advisor, so none of this, of course, should be construed as financial advice.
No, and I appreciate that, Ash. Definitely today, I think what we want to do is you're a sponge over there at Real Vision, and we love to be able to extract some of that information to be able to start to identify, where things are going with the world today. And the traditional investors and traditional markets have changed so much, and it's happening at an exponential rate. And Raul did such an incredible job putting together his exponential thesis forecast and where he sees things going in the exponential age. I think a lot of people are starting to really buy into that and understanding the fact that technology today has made the world so deflationary. And I think that unfortunately, it's very difficult to see with the way the Fed operates their current system that they have been doing for over 100 years. So it's challenging, I think, for traditional investors to really see that. So there's a lot of themes that are just, I think, interwoven that people have to try to figure out how to make decisions and what markets to actually make those decisions in. So I think, today we're just going to explore a little bit about, I think, overall what you're seeing based on your conversations. And I'd love to be able to take that into the crypto space, because obviously crypto is happening at an exponential rate. And I think that's kind of the new age of where technology is taking us from a financial perspective.
Yeah, that's No, that's exactly right, and extremely well said, Anthony. I would just give a little bit of context, and I missed the beginning of Raul's piece, so I'm not sure if he's talked about this yet. But when you talk about the exponential growth of these curves, the exponential growth that we expect to see in crypto, that we have seen in crypto, when you look at it historically, if you look at those price charts, I think the first thing to point out is a little bit of context. Now, one of the things that we as humans do and as investors is that we look at markets from the past and we hypothesize about what the future is going to look like. Now, sometimes those metaphors break down when we get too caught up in them and we say, well, X is really like Y. Crypto is really like a stock. Well, some ways, but some ways not. But we have to use these metaphors in order to get our heads around things. So they're imperfect, but they are guides to thinking. When you talk about this exponential age, I think that it's important to understand where that framework comes from. And it really does come from Robert Metcalfe and Metcalfe's law. Now, this is something that we've seen in the past. In fact, we've seen it very recently in the growth of social networks. The value of these networks is proportional to the square of the number of users. So as more users join, you see the growth of the value of those networks rising exponentially. This is something that if you think about it, it kind of makes sense intuitively. What's the value of Facebook if you're the only user? Well, the value is pretty close to zero because there's no one you can communicate with. So too for Twitter, a medium where many of us, particularly in the crypto space, like to communicate. The value of that network increases as dramatically as an exponential function of the number of users who are members of the network. This is something that we've seen very much in the social media age, but in a certain sense, we've seen it before. It would be true of, for example, fax machines or even telephones. The value of the communication medium is a square of the number of people who are a member of it. If I don't think that I can pick up my iPhone and send you a text message, it doesn't really have a whole heck of a lot of value. But as the user base grows dramatically, the value of the network grows exponentially. And so we think that that's what we're seeing in crypto right now. That's the hypothesis, and it certainly appears to be the case.
Yeah, and I think that's an excellent point. If you think back in the early 2000s during the dot-com boom, people weren't really talking about network effects like they do today. And people didn't really see what was really happening. And like you take a company like Amazon, when it was trading at $10, you never would have thought it would be trading at $3,000. And you wouldn't think it could go to $10,000. It just didn't make any sense. But today, how this world is evolving with technology, it's happening at that exponential rate, which
Right.
needs to have some sort of basis to it. And that makes a lot of sense.
Hey, let me just throw something else out there and talk
Sure.
in terms of Amazon. You use that as a metaphor. I don't have the data in front of me right now, but I believe during the crash, 1999, some of us were old enough to be there. Some of us were old enough to remember it. I was working at Credit Suisse at the time. But one of the things that stands out in my mind is the nature, the trajectory of price action on Amazon. I think it experienced something on the order, and I don't know the exact number, but it's like an 88% drawdown, max drawdown, and it stayed underwater, meaning if you bought at the top, you were negative on Amazon for something like 38 months, 42 months, some crazy period of time. Now, obviously, we know that in retrospect, Jeff Bezos is, if not among the richest men in the world, among the richest people in the world. And when we look at that, you sort of wonder, cryptocurrency, Bitcoin, for example, has had 3, maybe 4, 82+% drawdowns in the last decade. So these assets are very volatile. That isn't something that's new to crypto. I think that's an important point for people to realize. We saw the same volatility in the so-called dot-com stocks back in the late 90s and early 2000s. So again, the history becomes valuable context for understanding the present.
That is an excellent point. So we could probably say that Jeff Bezos was the hodler before anybody called it hodling.
Yeah, absolutely. I just interviewed Mark Yusko and we were talking about this, a few months ago. And he said, the only two people who held Amazon stock the whole time were Jeff and his mom, right? Like you really needed nerve to go into that. If somebody, it looked pretty silly, I can assure you, in 2000, 2001, post.com blow up to say, this internet bookstore guy named Jeff, whose stock just dropped 90% or whatever the number was, he's going to be the richest man in the world because he's going to use the internet to develop supply chains. I mean, you would have sounded like a raving lunatic if you made that argument. And it was very tough to hold on. It was very tough to hodl.
I'd say that there's nothing like your mom to support you through thick and thin. And thank God for moms. Yes. Jeff is lucky. So listen, you guys at Real Vision have done some amazing stuff. You mean democratizing premium content, coming to the market with the free crypto content, which is amazing. I mean, the world has changed so much. I mean, yes, the internet's flat in the world when it comes to information, but the digital age with the digital content today has been just stunning to see all the individual contributors. But for you guys as an organization to really come to market with free content is just stunning, right? So, could you share a little bit, what was the reason for that direction? And, how did you guys decide to go in that direction?
I think it was driven by the desire to reach as many people as quickly as possible. Talking about exponential age, this idea as a business model, for example, the idea is you want to grow as quickly as you possibly can. And it's not necessarily just about maximizing revenue. And I think this is true of Real Vision. It's true of other businesses in the exponential age. You want to maximize for your number of users. You want to maximize for your number of subscribers. You want to bring as many people as you possibly can into the network. Real Vision has built the Exchange, which is our own internal social media network, so to speak, where people can communicate with each other. That was a major part of our initiative. And we also just wanted to reach as many people as we possibly could with this technology. I think, we do quite well selling subscriptions for macro products. And this is an opportunity for us to grow the business and to bring people along and to bring people in and to help. I don't want to say educate them. It's really educate ourselves. We're all on this journey. I certainly feel myself like I'm very much a perpetual student. That's why I enjoy doing it. And I think that one of the things that people find value in is that we're all kind of learning together. We all entered this curve. No one knew about cryptocurrency, 13, 14 years ago. And so we're all on this journey to understand it better, to understand what's happening in the space, and to hopefully understand a little bit about the direction it's going in.
Absolutely. And considering that, you're at the forefront of this and having done countless interviews in the crypto space, what are some themes that you're seeing that are shaping up in the crypto space that are probably some important things that we should start to take a look at?
Well, I'm going to give you the two most obvious. And I think from them, there are some profound sort of bits of wisdom to be extrapolated. The first is that it is still very, very, very early in this space. Now, I know that there's a lot of FOMO in the space, the fear of missing out. And when people come in and they see where the price of Bitcoin is, they go, oh, damn it, I'm too late. I got here after the fact. My view is that it's still just incredibly, incredibly early in the space. The Satoshi white paper around Bitcoin came out October 31st, 2008. So obviously a very short period of time. We're coming up on the anniversary here. But look, I'll throw out another date. That's September 4th, 1882. September 4th, 1882 is the day that the electrification of light began in Lower Manhattan. Now, if you were there or reading newspapers about it, what would you have thought about this crazy Edison invention that's been harvested called electricity? Well, you would probably look at it and think, this is the thing that we're using to replace candlelight, and we're using it outdoors for street lighting to replace gas lights. That would be your metaphor. We were talking about this earlier, how you think about things, how you contextualize them, and how you extrapolate them forward to the present. You would say, well, it's a slightly more efficient, cleaner way of doing outdoor illumination. I get it. Okay, so it's like streetlights, but it's different, and I don't really understand the physics of the electricity, but the power runs along a wire rather than a pipe that runs a gas line, right? Now, that would have been a perfectly rational and perfectly logical way to think about the world back then. But if you think about what we know now in 2021 about the uses of electricity, electrical lighting is obviously just a tiny, tiny use case. You would think about things like air conditioning, something that you would never have foreseen if you'd seen those guys running light in September of 1882. So I think that's where we are right now. And if it's okay with you, I'd like to talk a little bit about what I think this technology really is at its core, because that's really the question that people are trying to get their heads around. What the hell is this stuff? And what does it do? So in many ways, bringing in the history of the internet is a valuable metaphor here. If you think about what the internet did, the internet radically democratized the ability to consume, but especially to publish information. That meant that anyone, anywhere in the world who had access to an internet connection and a device to connect to, could could not only consume huge amounts of information, things like newspapers in the very beginning, things that were print, and later obviously audio and video as we're seeing now, but it also allowed them to create content and distribute it all over the world. I have right now, I'm talking to you using an internet camera that I bought at Amazon for like $199. If you think about when I was a reporter at CNBC, just 10 or 11 years ago, the cost of equipment to do video broadcast, the jobs that were required to do that, big burly union guys moving around cameras and stuff. And now we're doing this, basically for a song. Every junior high school student in America can go and create video either from a phone, from a computer, if they don't have one at home, from their school's computer lab. So we've seen this radical democratization of information through the internet. So what is cryptocurrency and how does it relate to that prior revolution? Well, one way of thinking about it, I think, is to think about it as the ability to democratize, and this is a complex concept, identity, trust, and value. What does that mean? Well, it means that on the internet, as you can see on 48 Hours or one of those news magazine shows, you never know really who the person on the other end of the camera, on the other end of the email truly is. And what we're able to do with these with digital asset technology, with things like proof of work and proof of stake, is validate identity, value, and trust. And we're able to do it in a decentralized way. Now, that's an important concept because it means that we don't require trusted third parties to do something. If you want to sell me your used car, for example, and I want to buy it, how do you give me that? How do I pay you for that car, and how do I take title of it? Well, right now it's highly manualized. We can do it, I suppose, in a sense, over the internet. But what that really means is that I'm going to transfer money from my bank, maybe it's Chase, to your bank, maybe it's Wells Fargo. So you have two trusted third parties who are intermediating that transaction. What cryptocurrency is about, what the underlying technology that powers cryptocurrency is about, I should say, the blockchain technology, distributed ledger technology, is being able to validate value transfers, being able to validate trust, being able to validate identity in a decentralized, distributed way. I know that there are people who may say, okay, that's really cool, and maybe folks who are really interested in engineering may think that's fascinating. But why do I care? Why do I need it? Like if I'm selling Anthony my car, or he's buying my car, we can do it. We have a bank. It works really well. I think there are two good answers to that question. The first is that's obviously a very Western view. Obviously we're very fortunate to live in a country that has a developed financial services architecture where we can do those things. But that's not true all over the world. And so this technology has the ability to truly globalize those value, identity, and trust transfers. And the second thing would be there's margin in those trades. Obviously, banks don't ever do anything for free. They do it. And so it's the ability to lower the cost of those transactions. And third, I would say, like with the electric light metaphor, it's all of these use cases that we can't really yet fathom, that we're just beginning to see the edges of shimmering around the periphery, where we can see what the future may look like and what some of those new applications will be that will be powered by this radical departure, this radical improvement in technology, being able to decentralize trust, identity, and value.
That is amazing to really comprise it into those three components: identity, value, and trust. I mean, truly, this world has been changing so fast over this. I mean, I think the pandemic has just accelerated this to a new level. Yeah. I mean, even to your point about the costs that take place. I mean, I was trying to do a transfer the other day of like $150,000, and they were telling me that I can only do $25,000 increments, wires at $25 costs. And I had previously done a larger transfer over the Bitcoin network, and it only cost me 60 cents. So, it's amazing to see these changes taking place right in front of us. And it's really daunting, I think, for these larger institutions that I think are so ingrained into the old network that they're struggling to figure out how to transition. So with that macroeconomic backdrop that you kind of laid on to us, how do you think this transition does take place? Is it just brand new entities that just come about? Or is there actually transition that will happen, or a little bit of both? How are you seeing that, Ash?
Well, one of the challenges is this is, as Raul pointed out, this is moving so quickly. The adoption curves on this are out accelerating things like iPhone adoption. So we really are in truly uncharted waters here in terms of what that process looks like. But to answer your question as best I can, I think the approach is probably all of the above. I think we're going to see the creation of new companies, protocols, other entities, DAOs around this. We're going to see mergers. We're going to see acquisitions. We're going to see partnerships. I would say that the one thing that we do have a bit of history on is if you look at the history of innovation, which is incumbents are generally very, very bad at disrupting themselves. Some do. There are some notable examples throughout the sort of business case history where you do see incumbents figure out how to integrate new technologies, acquire new companies, integrate and partner. But I suspect that a lot of this is going to be de novo. It's going to be new companies, new protocols, new organizations, new DAOs, these decentralized autonomous organizations that are going to grow rapidly in the coming years and decades.
Yeah, it's going to be a fascinating journey to watch and be part of. Just to kind of thinking about the crypto space, it's so diverse. You got Bitcoin that sits there as the new digital gold. You got Ethereum that's trying to be the internet of money, and really Web 3.0 applications being built on top of it, and then a whole new world inside there, which is the metaverse. You got real estate being developed, where you never thought that people would be buying real estate. You were thinking of this physical plot of land. It's a digital plot of land. You got NFTs, video games. Ash, what are some of the coolest ideas that you've come across recently? And what are some things that people should start to maybe pay attention to along their journey of identifying what's happening in the crypto space?
Yeah. Let me just first amplify the point that you just made there, because I think you hit the nail directly on the head, and it is such an important point. This idea of how diverse this space is, and trying to get your head around all the different things that it comprises. So I think very often someone will say, "Well, just what is crypto? Just break it. I want the 3-sentence definition of it, right?" And
oh Lord.
Yeah, there really isn't one. That's the nature of these digital assets. It's almost like the metaphor of when you blindfold a group and they touch different parts of the elephant. There's the leg, there's the sides, there's the tail, there's the trunk. And depending upon where you are looking, where you're focused at that moment, the elephant looks extremely different. You mentioned a few of them, Anthony, and those are all incredibly important points. Things like the metaverse, Web 3.0, building basically the next distributed, decentralized Facebook or Twitter, things like IPFS, the internet filing system, the ability to decentralize storage, decentralize compute. All of these really big ideas, tokenization, smart contracts, Bitcoin as a digital store of gold. Again, I guess if we come back to the metaphor, if someone had said to you in 1998 or 1999, I'm trying to get my head around the internet. What is it? It's basically email? Is that what it is? You would say, well, yeah, it's email, but it's bigger than that. And you would probably try to explain a bit about the technology and maybe a bit about the philosophy, about what it was attempting to do, and what the spirit of the internet was, about the spirit of decentralizing information. So if you start to extrapolate that forward, this idea of decentralizing value, decentralizing trust, decentralizing identity, it obviously can take on incredibly different forms. And by the way, one of the things that I should say, one of the few things that I can really feel like I have an edge on in terms of what I see and what I do is the incredible information flow that I see at Real Vision, because I'm talking to some of the most brilliant people in the space from all over the world who are doing all these incredibly different things. And the really fascinating part about it is, it seems to me, and this is just my own impression, that the people who I talk to are not any really more aware of things that are happening in other areas than maybe you and I are, right? Which is pretty amazing when you bring in someone who's really majorly into the Bitcoin space, a Bitcoiner, someone who's just truly passionate about the ability to decouple, for example, the nation state from the money supply, right? They're Bitcoiners who are really passionate about this. And you ask them, hey, what do you think about the metaverse? What do you think about NFTs? They're like, I don't know, that's not all that interesting to me. Or maybe even they reply with a little bit more edge, like, that's bullshit. We care about Bitcoin here. So it's fascinating how early it is that even the experts in this or that field are not aware of all of the things that are going on more broadly. And I'll give you a metaphor for how it's different from traditional finance. If you find yourself a hedge fund manager who's been running a fund for 20 years, one of these sort of legendary macro figures that we talk to on Real Vision, and you were to ask them, tell me something about your operations, they would say, well, I'm not an ops person, but I can tell you this. And then they would go on to describe in a pretty good 50,000 foot overview level everything that happens at their fund. If you ask them about the legal aspects of running the fund, they would say, well, I'm not a lawyer, but I'll tell you this. And then they'd go on to map out the essential points. Here in 2021, it feels to me like someone who's an expert in the metaverse probably can't map out even the most essential points of what's happening on the Bitcoin side. And very often the converse is true as well. So we would say in markets terms that the information is highly fragmented. So this is an incredibly fragmented market in terms of conceptually understanding what's happening here. And that obviously, as you will see in other fragmented markets, I guess, that gives you two key things: risk and opportunity.
That's exactly right. And, when you start to think about how, the various changes that are taking place at all parts of the crypto space, it's amazing to see when you start to dive how little you actually really know. You try to dive deep. I think I've been in the crypto space since the end of 2016, and I feel like every day I'm learning something new, and it's just like, my gosh, do you think you'd know it all by now? And it's like a brand new day every day with new information and new, breaking technology that's changing the world. And the ideas are exponential, like we said before. What's interesting though is that, that's where it becomes, I think, challenging for the average person, is to figure out where to start, where to get involved, where do I focus? Where is the future of finance going? Where do I spend my time? Should I be spending my time looking at, Bitcoin? Should we spend time looking at Ethereum networks? All the new networks are coming about. How I kind of look at this is that I feel like that this is like venture capital 101 at the end of the day. It's like, we're able to see venture capital with price action is kind of how I see the crypto markets, where right now, if you go to traditional venture capital, there is no price action because the company is not set prices at that point. So at this point, with the networks being able to set price at the very launch of the network, you get to see the volatility and the growth taking place, which is really what we're seeing in the markets when we say we're trading crypto. What are your thoughts on that?
Wow, those are some very big ideas, Anthony, and I think you've hit it there as well. So one of the challenges that we see in the space, I think probably the greatest short, maybe even intermediate term headwind right now, is the potential for the legal, regulatory, and compliance aspect about this. Obviously, we talk about the world in this sense, this sort of almost utopian sense of globalization and the ability to have a conversation from where I am in New York to where you are in Florida instantaneously. And why does it have to be Florida? It could be Seoul, Korea, or someplace in Africa or Europe. So we live in this globalized world, but the reality is we live in a world that is currently dominated by nation states. That's the dominant political organizational entity right now. And obviously we have regulators here in the US. I'm a US citizen. I think you're a US citizen. We have regulators that we don't want to run afoul of. We have courts, we have legal systems. And so it's interesting to see how that adaptation is going to occur to pull the current system into a way that you can really, look, we have securities laws that were written during the 1920s and 30s in the wake of the Great Depression and the 1929 stock market crash. So investor protections are important. The ability to ensure that statements that are made by corporations and entities are valid is incredibly important. We've seen this recently with statements of Gary Gensler, the chair of the SEC, and also Jay Powell at the Fed, both coming forth in the last couple of weeks. In fact, if you look at this little mini bull run we've had in crypto, it's when both of these two key regulators came forward and said that they had no intention of banning crypto. I think Gary Gensler basically said, hey, listen, that's something that has to come from Congress. I'm not going to do that unilaterally over SEC. So understanding how that legal regulatory compliance framework adopts and adapts to this system. Obviously, if you want institutional money to come into the space, and as many people who are here, probably here in a TradeStation, I know at Real Vision are very passionate about, you need to have certainty around compliance and regulation and legal aspects of how this is going to unfold. And we're in the very early stages of that. To get back to your point more specifically, one of the challenges that we've seen, and this is something that folks at TradeStation who are investors in capital markets certainly know about, is you have companies staying private for longer. And what that effectively means is that you have more value creation happening outside of the public market. So people who are accredited investors, people who have access to deal flow for whatever reason, get to benefit from that, and people in public markets, don't get that massive hockey stick growth the way they used to when these companies would go public earlier. So that is a real ethical, moral question, and you have to counterbalance that with this idea of the reason that we have these laws was because people got ripped off. People got cheated, people were defrauded. And in addition to that, the regulatory sort of infrastructure around central banks and securities as CFTC and SEC also are here to attempt to sort of steer the middle course between things like inflation and employment, and to not have macro crises, panics, inflict economic harm on the country and on the economy. So how we figure all of this out, how we balance all this out, it's a pretty tricky one. I can tell you this: I live in New York City, and if I want to get into a cab in front of my apartment and go to Secaucus, New Jersey, and bet on the Giants game, I can lose my whole paycheck. But if you're not an accredited investor, you can't get access to some of the private deal flow that's made some VCs very wealthy. So this is a moral and ethical dilemma with important considerations, important arguments on both sides, and seeing how we're going to figure out how to democratize the value creation while protecting investors, especially retail investors, I think is something that is going to be a process to figure out.
Yeah, I agree 100%. It's amazing to see. I mean, what do we have, like maybe 2 billion people around the world that aren't banked? It's the unbanked part of the world. And, I think that's where Bitcoin kind of gives this whole element of banking hope, that you can actually get onto a monetary network at literally zero cost, and you can transfer value. It's stunning to see. And I think you hit it. I think you hit the nail on the head. I think there's a lot to be understood before we go ahead and start to make determinations of what these markets are and how to actually protect investors, right? Because that's what I think what the SEC is trying to do is protect investors, which makes sense. But I think the world is absolutely changing. I think the trust and transparency needs to be reviewed differently, and that there's opportunity for that. And I think there's a lot. I think the ecosystem and the participants certainly do want to convey the messages of what the changes are. So, I would hope that the learning from our regulators does take place, and that they're open to that, which I do see happening and taking place. So it is exciting to see. That we're forming that right now. And I think that's going to be very helpful for the institutional investors that are trying to get involved, that can't get involved because they're waiting for that clarity.
Yeah, and look, we should say that there's been a great deal of regulatory forbearance. They've done a pretty good job thus far. We're at about $2.4 trillion of market capitalization or total network value in the crypto space now. Some of that maybe, especially the coins at the bottom of the curve there, may not be the truest representation of value. So maybe it's a little bit less. But the reality is that regulators in the U.S. have allowed this market to thrive so far. Maybe there may be decisions here or there that individuals disagree with, but we're fortunate that it has been allowed to evolve to the extent that it has, and I'm optimistic actually about enlightened regulation in the future.
I am as well, and I'm optimistic about the United States and America as a whole. I think there's a lot of opportunity here that we're going to be able to create. I mean, I just start to think about the things that could take place. I mean, you think about automation and autonomous driving and the ability for machine to pay machine and all these things that will take place from programmable money and smart contracts. It's going to be a stunning future, and I'm excited to be part of it.
Yeah, me too. And it's as you say, how all of these technologies, things like AI, autonomous vehicles, drones, how they're all going to integrate, and what will it mean to have true decentralized measures or abilities to do things like trust, value, and identity in those systems. Boy, it's going to be a brave new world.
Absolutely. So trust, value, and identity. Ash, can we bring together a few maybe ideas that you've kind of come across from having some conversations around trust, value, and identity, anything that you could share with the audience that may be something interesting to take a look at, and maybe even be one of the most recent interviews you've done? Just what are some thoughts around that you could possibly provide people and direct people where to go learn a little bit more about those themes around the crypto space?
Well, first and foremost, of course, I would say sign up for Real Vision. It's free. And we have these conversations every day where we try to explore exactly these concepts. Second, I would say in many ways, some of the best way to learn is to participate, particularly in things like NFTs, Ethereum, smart contracts, places where it's just very remarkably difficult to understand. So it's challenging because I think unlike for example, if you were interested in learning about traditional U.S. equity markets in the 1990s, you can explore that space by maybe watching CNBC, reading the Wall Street Journal. But this space is very hard to understand through conversation. And the way to get it best is to really participate in it. And I'm not suggesting that people should invest. This isn't investment advice. But if you've got a couple of $100 to go and play around with the assumption that you're going to basically burn through it all in gas fees. When you create your first wallet, even if you do it just in the test space and you're not using real value, you begin to get a sense, you begin to get a feel of what this space is like. And unless you physically experience it, unless you can feel it, unless you can touch it, it's really hard to understand. And I know for myself, Ethereum, for example, I didn't really get my head around it until I created a MetaMask wallet, started doing some small transfers. It's frustrating now because the gas fees are so high, so it's hard to go in and experiment with 10 or $20. But you can do it with a couple of $100. Go and do things. Go set up your wallet, transfer money back and forth between two accounts you've created, just to get a sense of what this is. And when you do it and you look at a block explorer, for example, which shows the transaction history, it's a strange feeling. It's almost like being inside the bank, right? You get to see a level of granularity that you just can't see in traditional financial systems. And so being able to play with this stuff, being able to go and buy your first NFT, the ability to just do these sort of basic things on the blockchain, it gives you a sense, it gives you a look and feel for how this space works, for what it's really about, that it's really hard to get by reading about it. We're trying to do some interesting novel stuff on Real Vision in case you don't want to actually sink real money and spend a couple $100. We're doing some of these on-screen demos where we bring in experts and say, okay, this is pretty cool. Walk me through your protocol, man. Show me what this is about, and explain it to me like I have no prior knowledge in it. So I think just trying to get your feet wet, again, not as an investment, but just as a means of playing with the technology. It's like trying to explain an arcade game to someone who's never played it. When you physically, grab the joystick and you're playing Space Invaders, I guess, in the early 90s.
Smash the buttons.
Yeah, just smash the buttons. Smash the buttons. It gives you a feel it's very hard to get from reading.
Yeah, I agree 100%. That's how I, personally got into the space, is I had to get involved in some sort of way. And for me, it was through mining and through actually going and buying some crypto and just trying to actually get my, Raul even said it, like get a little bit on the table, and then all of a sudden you start to pay attention, right? And then you start to identify where to learn and, what journey you want to start to go down to. Really, I call it the rabbit hole. Everybody has kind of their rabbit hole story. To go identify, different places you can learn, and, try to get yourself a basic understanding of what this new world is shaping up to be. Yeah,
that's very well said.
So listen, Ash, I just want to kind of close it up here. And I think that the last thing I really kind of want to go through is a little bit of a prediction I would like you to share with us based on all your thoughts. And it doesn't have to have any basis or anything, but just what are some of your thoughts on where we're going to be in the next 5 years? Like, what does this world shape up to be like? Does traditional finance start to merge with crypto? Is it just this crypto world that starts to just kind of build on its own and then just becomes a transition phase for people that decide to exit out of old finance and enter into the new financial world and realm? What are your thoughts on that?
Well, those are great questions. I would say, again, it's probably all of the above. I think there's going to be a merger between some of the traditional financial architecture and cryptocurrency, for a couple of reasons. We've talked about all the great and wonderful things about crypto, but there are also some challenges. Obviously, things like transaction fees are still too high. It doesn't really make sense to do a micropayment if you're buying something for $20 and the gas fee is $125. There's some significant issues around user interface, user experience. I often say my mom doesn't have a MetaMask wallet. It is not something that is necessarily as intuitive as walking into your local retail branch with your driver's license and a bill and saying, hey, I live here and I'd like to set up a bank account, and you have a human being to walk you through it. So my sense is that we are going to see some merger because from a user experience, user interface issue, people need to be onboarded into the space. So I think there are opportunities there for traditional financial services firms to benefit. And then on top of that, I would say that the space is going to continue to get deeper. There are going to be more interest in the space. You look at this just purely along generational lines. If you go to your company or my company and you ask people in their 50s or 60s what they think about this technology, and then you ask people who are in their 20s what they think about that technology, you will see that there's a tremendous divergence. So there's definitely a generational issue here. There's definitely a sense that people who are in their 20s, in their teens, and then the kids coming up behind them are just much more integrated into this virtual world that we now all inhabit. But they are truly natives in a way that some of us who are older maybe are not. So I think that the future looks very bright. It's going to continue to deepen. And I also think it's going to continue to widen. There are going to be applications that we haven't thought of yet today. I think you made the point earlier, Anthony, about things like autonomous driving and autonomous payments. These are areas that we were just beginning to catch a glimpse of from the sketch on paper, and to see how that unfolds. It's going to be fascinating. But I'm just incredibly bullish on the technology. I think this is a technology that's like the internet. It's one where as the backbone gets built out, we begin to see the applications that can get built on top of it, layer by layer by layer. And by the way, if the past is any guide, the price volatility is probably going to continue.
I would agree 100%. You made some astounding points there. It's one of those things that you look at it, and I think we've seen a few different stats about the correlation of the internet and where the crypto space is today. And I think it's really correlated around Bitcoin adoption at this point in time. But I think effectively it says we're right around, I think the year 1997, 1998, as far as adoption goes, we're on track to, I think the stats are right around 1 billion users, right around 2025. I think this is astounding to see. If you could imagine 1 billion users on the network, I think we're maybe close to 200 million right now. It's just going to be amazing. The thinking that takes place globally now, we get to bring it into a unified network that we all get to be part of around the globe, which is astounding. So I think that the innovation, like you said, is really we're at the very beginning stages of it. We're going to have a lot of opportunity to see a lot of different formations of businesses take shape. It is an exciting time, and I am excited to be part of it with you, Ash. And I really hope that we can try to create some more opportunities like this to collaborate and see what else we can create for people to learn from.
That sounds great. So it's the mid-90s. So unbutton your flannel, crank up the Pearl Jam, Soundgarden, and Nirvana. Strap yourself in and get learning about this technology, because I think it's very much the beginning. Awesome.
Well, Ash, thank you. I appreciate your time today. It's been incredible talking with you, and I look forward to our next session together.
Thanks for having me on the show.
Thank you.
Thanks so much, guys. We really appreciated that. That was a really great session. Again, just powerhouse guys right here. So thank you so much for joining us.